Hi, everyone. Welcome back to Wall Street Silver. Our guest today is Garrett Goggin. He is the editor of Stansberry Research Silver Stock Analyst. Garrett, thanks for joining us back.
Hey, thanks, Ivan. Thanks for having me. Jim, how you doing?
Good, good. Great to have you back on. People love hearing from you because, you are, a lot of our guests are sort of just more generalist, macro, gold, silver. You are pure silver as the Stansberry analyst. So, we love having you on. And silver's turned around recently. We got down into the low 18s and now it's poking its head back up, above 20. And now we're banging on 21 here real close in the next, I don't know, that's the next move up. What do you think it is? Is it, the people are sensing the sort of a Fed pivot, or the inflation numbers are coming down to a reasonable number where the Fed can pause? Or what's your initial take on why silver's poking its head up right now?
Yeah, I think the main thing is the Fed pivot. To me, it's obvious the economy's in a recession. You've got negative yield curve. Inflation seems to be moderated at 8.4%. The Fed can't hike rates in a recession. So, I think the Fed, pivoted last meeting. I don't see another rate hike ahead. And, the next things that are going to be happening is the economy continuing to roll over because prices are so high and, the Fed having to cut rates, which is going to push silver higher. The other thing is, this aligns with the technicals too. Like I see on your website, you guys follow the commitment of traders pretty closely, right?
Yeah.
And you follow inventory, which I follow, and registered inventory of silver has fallen to the largest amount. It's what, like, let me see, I think it's 50 million ounces.
So you were mentioning the COMEX and LBMA silver changes in inventory. This is something you're tracking?
Yeah, I every day I take a look at the COMEX. I don't necessarily take a look at the LBMA, but registered silver has dropped to about 50 million ounces from over like 150, 200 million ounces over the past year. And that chart you're showing right now, I like it. Is the silver squeeze having an effect? And you take a look at that and you see the silver inventories dropping. Everyone's buying physical, so. Yeah, I think you guys are doing some good work and you're getting the word out, and people are getting tuned into silver. One thing regarding silver, physical silver is, it's a great investment. Silver does nothing like 90% of the time, but that 10% of the time it goes to the moon. So you're on a physical silver, you just hold it for 90% of the time. And then when, the price takes off due to inflation taking off and the Fed reversing their course on rates, it's going to be a great time to own it and you're going to make double, triple your money. One other thing regarding the commitment of traders also, I follow commercials, I follow managed money. The managed money, they're smaller traders that they're usually net long on silver. They are net short. The last time this happened was back in 2018, 2019, which was a great time to buy silver because it was about $15 an ounce. And then the commercials are usually net short silver. They're basically flat right here. So we're looking at two standard deviation opportunities, and this stuff it doesn't turn overnight, but you're going to look back in a year or two, and you're going to see this period as a great time to be buying silver and silver stocks.
So it's your opinion we're entering that 10% of the time when silver just goes nuts and it's not dead money. I mean, we're getting close.
Yeah, well, Ivan and I were talking, you take a look at the German hyperinflation that occurred, at the end of World War I. And,
Right.
It's not a straight line. It doesn't go 8% then back to, it doesn't go 8 to 10 to 12 to 16. It goes in an inflationary deflationary spiral. It goes 8%, 4% when the German bank hiked their rates, and then it went straight up to 16%, and then went down and up and down. And it's this crazy pull between inflation and deflation. That's what the Fed's going to be battling right here because they've raised rates so much. The housing market it drives the economy, and the housing market can't afford it. No one can afford mortgages right now. I live in Jupiter, Florida. There were like 10 houses for sale a few months ago. Now there's thousands of houses for sale. People can't afford the mortgage payment. The economy's rolling over. It's in a recession. The Fed's going to have to cut rates, and then we're going to have to go through this inflationary cycle again.
Here we go again. The beginning of the Big Short version 2.0.
Yeah.
Builders are being stuck with too many houses. Mortgage rates are still above 5%, but it wasn't that long ago they were at 3%.
Correct.
Right.
It's tough to make this work with a lot with the numbers.
Yeah, and you know, everyone's levered up. Everyone's trying to get the most out of their income they possibly can. So their payment is maxed out, whether it's 3% or 5%. But you look at a mortgage payment at 5% versus 3%, it's almost double what it is at 3%. You know, people can't afford it.
And I saw also a number in China recently. The entire mortgage-backed securities market in China has frozen up. They're not securitizing any mortgages, meaning all these mortgages are sitting on the bank's balance sheets. And that's starting to happen in the US also, I believe.
Yeah.
How much, I mean, banks are going to be much less willing to approve new mortgages if they're not able to securitize these mortgages and send them out to pension funds or mutual funds.
Yeah.
Or things like that. It's becoming a real issue in the housing market. And we'll see what.
Auto loans are the same way, you know, and you have a lot of companies that are traded publicly that made it really easy for people to gather more debt through auto loans and stuff like that. And people are just, you know, leveraged to the gills, and it can't go any higher.
So I sort of believe that I'm on the same page with you that the Fed really is limited in how much they can raise rates. And that's the key to the silver and gold trade is maybe not lowering rates, but they got to pause at some point and just let the market digest this and see what happens. And that could be the trigger for silver and gold to start launching once people realize we are at the peak of the hiking cycle.
I think we're there. You know, inflation, moderated just a little bit, you know, with the CPI coming out today. You know, and the yield curve is extremely negative right now. It hasn't been this negative in decades.
Right.
And now here comes the U.S. government spending $700 billion on, you know, the new green. A lot of stuff was in there, and, you know, a lot of special interest stuff. So when you're looking at some of, I mean, you're a stock analyst guy.
Yeah.
When you're looking at these companies, the silver producing companies that you like to follow, what's the key thing that you want to look for right now? Is it just you want low cost producers, high margin or high grade mines with low cost production?
Yeah, that's it. High grade, low costs. You know, the silver miners, their margins are really volatile. They range, they're about 14% profit margin right now, because, you know, their average cost is about $17.50, and with silver at what, 19.50, $20, you know, the margins are razor thin. They're much smaller than gold margins. Gold miner margins are much more stable, range between 40% and 6%. And then if you chart like the GDX versus margins, it tracks, you know, right on, the correlation is like 100%. And if you track the SIL ETF with silver miner margins, it tracks, you know, right on. That's what miners trade off. They trade off margins. And right now, the average silver miner is trading, it has a 14% profit margin. But the thing is, if you run a regression of margins and costs right now, the average silver miner is about 30% undervalued, you know, and in this, it doesn't happen very often. And this is why you own the silver miners, because they're extremely leveraged. The profit margins go from 0 to 10% to 50% in a span of a month. And then but the thing is, you need to get through the lean times, and the lean times, unfortunately, are long. Like 90% of the time, silver doesn't do anything. It lags, and then 10% of the time it goes through the roof. And that's what you want to own it for. But you need to find the low cost miners, because if you don't own the low cost miners, then they're going to be diluting. They're going to be issuing more in shares every year. I took a look at the GDXJ, and I took a look at the components of it and how many shares the components of the GDXJ issue. It's about a 10% a year rate. And, you know, if you're not adding any value and all you're doing is selling shares, that 10% a year really adds up, and it's hard to overcome with value creation when silver, you know, explodes higher. So, you know, you want to stick with the high grade, which leads to low cost, which leads to profitability, because, you know, they're making money and they're not leaky buckets where all the money's flowing into the management pockets.
Yeah. And they're not issuing shares. They're not issuing I mean, sometimes they do if they're like funding an expansion.
Yes.
Like I think like a good example of that is Aya Gold and Silver. They're funding an expansion from 2 million ounces up to 8 million ounces. But it totally makes sense, because this is a profitable company that's making money every quarter, and high grade, low cost. You know, something like Aya Gold and Silver, that fits your model for
no doubt.
stocks where you're not gonna where the management's doing the right thing.
Yeah, because they're doing that raise to increase production. They do a feasibility study and they know what the capex costs are, and sometimes they need to raise that capital. They raise the capital, they build it. If they do a good job, they'll build it on time and on budget, and it'll lead to increased production and increased cash flow, and you can build that right into your model. It's just the ones that issue shares for no reason with nothing to show for it. And if they're issuing, it's hard. Like you look at stock price charts, they're easy, right? You find them in Yahoo, you find them in Google. But the interesting charts that I like to look at are share price, shares outstanding charts. I'm lucky to have a Bloomberg, so I'm able to see shares outstanding for any different company that I want to take a look at. But you need to look at the shares outstanding and see whether they're adding value to all those shares that are being issued or not. And how you do this.
So who would you put in this category of worthwhile listening to? So Aya Gold and Silver is one of them, obviously. Yeah. Next one I wanted to show you is SilverCrest Metals. Would that fall in that same category of worth looking at because they're doing it the right way?
Yeah, it comes down to knowing the people. I go to the Denver Gold Show every year, and I go up to PDAC most of the time. So I get to know the people in the industry very well. And there's good guys, bad guys. And I've known Eric Fear with SilverCrest One that got bought out by First Majestic. And he is an extremely frugal guy, and he looks to start projects with low-cost open pits. And then he kind of bootstraps into a sort of mill sort of process. And he did that and led to extremely profitable production at SilverCrest Mining, which was a 1.0, the first iteration. And then it led directly into SilverCrest Metals, which was SilverCrest, iteration 2.0. And that whole story is really interesting because First Majestic bought SilverCrest Mining, and they went in negotiations. And the first thing Eric did, he goes, listen, you can have everything, but this little block right here and this huge map, just, it looks like a few square miles. He goes, I'm going to keep this for myself because, I've looked at it. It looks interesting. And he's like, all right, no problem. I'm getting 99% of the property and, you can have that. But then Eric knew right when they started, drilling that off, the grades on that were amazing. And the amount of money that they spent, like they raised capital to drill. And if you look at the amount of ounces found or in the amount of value created per the amount of money that they raise, they're paying like 12 cents an ounce for every ounce of silver that they found. And then they basically built the mill on time and on budget. And it's being commissioned right now. It's an extremely low cost producer because the grades through the charts, it's got an average grade of like 1,000 grams a ton. This is silver equivalent. It's mostly gold. It's like 60-40 gold silver, but if you convert it to silver, it's over 1,000 grams a ton, which leads to really low cost. So they should be producing at about $7 an ounce. So whether the price of silver is at 15 or 25, it doesn't matter. This company is going to be raking in the money. And Eric's a guy that does it well. He's a value creator, and he's one of the guys to follow in the industry.
Yeah, I've talked with these guys. They're definitely doing it right, and they're going to make money at any price of silver that you're likely to see. And this company, if silver goes higher, 25, 30, this company is just going to be raking in the money.
Yeah.
So very smart operators, which is what you want to do. Another one that's very profitable that doesn't get probably the credit that they deserve for being such smart operators is Silvercorp Metals. Yeah. And it trades at a huge, this is a company producing 6 or 7 million ounces a year. Yeah. They're expanding right now up to 12 million ounces a year. And they're always profitable. They don't dilute. They pay a dividend. They do share buybacks. Yeah. And, I think the only negative about this company is, or it's not even real, is it's in China, but they're doing it all right, aren't they?
Yeah, I know SilverCrest very well. I know Ray, the guy that runs it, and they were one of my favorite silver companies on a valuation basis a few years ago, and the stock doubled. We did great on it, but I'm an analyst. I look at the numbers. I look at the financial of these companies. Basically, if you look at their news releases, all their news releases like, oh, we made so much money. If we use gold and copper as a byproduct, our cash costs were negative $12. It's all bullshit. I do all these things on an apples to apples basis. I get to know which ones are truly profitable, which ones are just blowing smoke. Silvercorp makes money every single quarter. And, you know, like you said, they've been issuing a dividend for a long time. They buy back shares every quarter. They are, you know, the real deal. One thing that I found amusing this quarter, there are a few silver companies out there that are marginally profitable. They announced that they're going to be buying back shares, but then they're also renewing their ATM facilities, right? Their ATM at the market share offering. So it's like,
they can sell anytime. Yeah.
What are you doing? You're going to be selling shares, you can be buying shares. But yeah, Silvercorp, they're able to buy back shares, and that's what you're able to do with free cash. You're able to pay dividends, you're able to buy back shares, you're able to look at growth opportunities. And Silvercorp has been doing it consistently for years. And yeah, those are one of the good guys. And one of the things regarding Silvercorp is they own a good chunk of New Pacific Mining. You know New Pacific Mining? They're in Bolivia. I went down and visited them a month or two ago. They hitting wide widths of like 500 meters of 100 grams a ton silver, which isn't crazy high grade, but the widths are amazing. So and Roy is affiliated. Yeah, Ray. He's affiliated with New Pacific in Bolivia, and he owns a chunk of shares too. So, if you look at South America, it's a pretty sketchy place to operate. Bolivia is becoming one of the better countries to operate. Ray knows what he's doing.
I've heard that also.
Value.
The interesting thing about Silvercorp is they're sitting on $200 million in cash.
Yeah.
Their investments in all these other companies that they have is worth another 200 plus million. And the total market cap of the company is only 600 million. It's like you're getting all their production in China for almost for free, almost at like 1.1 times cash flow. It's ridiculous how cheap it is.
Yep, correct.
Garrett, thanks for joining us. We really appreciate it. We love touching base with you to get your macro take, and you're one of those rare guys who's actually a silver analyst who looks at this stuff all the time for Stansberry. We're going to have your link in the description if people want to follow you. To your Twitter account, it's great to follow you, and your stock analyst website at Stansberry. So people check it out.
Good. Thanks for having me. Nice to talk to you guys again.